Give me a break. Hey, everybody, welcome in. I am Sweet Bobby, and this is the Trader Nerd Radio Network. Ladies and gentlemen, thank you for joining us. Real traders never trade alone, they trade with their fellow nerds like John and Austin and Ben and Bull and Daniel and DB and DMT and Dunn and Hal and Javier and Jim and John and Laurent and Matt and Mikey and Mo and Ricardo and Schwaz and Stacy and Stephen and Thomas and Vicky with an I and Vicky with a Y. And I am Bobby with a Y. How are y'all? Hope everybody is doing good. And it feels good, ladies and gentlemen, to be back in the premium selling game. But I got to tell you something. The back tests on premium selling don't look that good. I'll be honest with you. Um, I was doing a little bit of where's my thing at? Where's my thing? Hold on a second. Doing a little back testing on Option Omega. If you want a chart for a discount to Option Omega, look in the description below. Well, my computer's slow. I need to restart it, but we'll try to get through it today. But we did a back test on Option Omega, and selling premium like we're doing doesn't look too snazzy, to be honest with you. The best premium that we had was our 111s. And if we, I don't know, I guess we could go back to doing 120. I don't know. I'm a little bit, let's see what this looks like. This is SPX, 250 wide instead of 25 wide. And look, you had some big losers on this thing. So, and a 1.7% return with a 20% drawdown. I don't know, man. This didn't look good at all. So who knows what the thing is, we're selling premium. We're going to sell a little bit of premium. That's what we're going to do. That's what the plan is now. Sell a little bit of premium and look at our metrics and make sure everything is safe so that we're not going to blow up our account ever again. We just don't want to blow up like we blown up. Let's look at the linear regression. Look at this, y'all. This thing is taking off like a rocket, but it's still within our little channel here. God, everything is so slow today. Come on, man. People ain't got time for this. Let's see if I can get it here. We'll figure that. We'll go back to their thing here. So the market is up today, 0.21%, although we are drifting downward. As you can see, AD is drifting downward a little bit. AD is 136. VIX is in the 17 handle. And who knows what volume is doing. Volume is what volume is. Volume's picked up a little bit on this little down move here. So we're still up on the day. Let's see how the big green monster looks. Just what we said, we're going to the 57.41. And maybe my chart is off a little bit when I drew it, but it looks like it pretty much tipped right there and popped on back. So we should hang out in here for a while. I don't see it really. It'll take a couple of times hitting that 57.41 probably before we break out above it. And then we have up and away all the way to the 59.45. So that should be interesting. See if we got our linear regression now. Yep. Linear regression looks like this, except we don't have our lines yet drawn because everything is taking so long. Here we go. But it's still within the channel, even though there is a gap up there. Okay. So let's see how our little account's doing today. Let's see how our little, God, everything is slow. It's crazy. Why am I getting a call from Ohio? Isn't that where they eating the cats and stuff? The cats, the dogs. Oh, man, I love it. All right, let's see. Where am I at? I'm not looking at Claude right now. Let's see what our little put credit spread is looking like over here. Where's my thing? Oh, here it is. Let's see what everything's looking like here. So it's nice to show a little bit of profit against those egregious losses that we have. But let's see how our little SPY thing is doing. Okay, we're up 230 points, $230 on the little thing so far. So our first little income trade is doing right nicely. We're at 44.2% profit, and we plan to take that off at Friday or let it expire. So the 517, 542 is where our strikes are, 517, 542. So this is looking really good, what we think that it should do. Now, again, the back test doesn't look too good on this, to be blatantly transparent with you. So I don't know. I'm thinking that I could maybe go out and do my 111, but I mean really small, really small. And I don't even know that I do the put debit spread. I just may sell some premium out 120 days like we were doing and let it fly with our thing. But I don't know. I may keep this up and just see how we're doing, especially if I can look at the charts and decide and the expected move and decide if indeed we think that we're going to go up in any individual week or if we think that we're going to be down in individual week. The video that I showed everybody in Muscadine Mafia section, they didn't tell everybody, oh, by the way, they were like, oh, you need $25,000 to do this. They didn't tell you that if this thing's a full loser, you're going to lose your entire $25,000 account. They didn't tell you that. Now we've got some nice little hedges in here that make it look really, really attractive. Let's see what our hedges look like over here. So with the 111, well, with the thing here, we have $51,000 worth of protection. Well, then evaluate at. Let's move this to today. This is even weaker, isn't it? Oh my God. Well, we don't have a hedge. What happened to our hedge? Let's see. That was a lot from 51 down to 22. We might not even have a hedge by the time we put this thing on. No, we don't. We don't. Uh, we don't at all. Let's see how close some of our things are. So let's see if this were to go up none. Let's just see what this thing was. If we had a grind down market, we had a grind down market of -4%. We'd be down $5,300. If we went down 8% with nothing, we'd be down 18,000. But if we got some volatility, that helps us a little bit, doesn't it? Helps us a little bit. And if we go to the downside, it certainly is good. Yeah, so it doesn't look that good. With our we're not fully hedged. So when I even said I could sell a naked put of a 111, Lord, no, you really couldn't with this particular thing on. Let's see what it looks like without our thing. Yeah, we got great protection there, but we lose our protection with this. So with the SPY trade that we have on. So that's very, very, very interesting. Let me just see what we got here. We got a 3-5, we got a 3-5, we got a 20, and we got a 5. Okay, everything looks good. So maybe I wonder what would happen if we did some type of diagonal in this little thing to kind of beef it up a little bit. We did like a 12-20 and we diagonalized it. Let's see what that might do to us. You want to play with that a little bit? So let's see. So this is at 46%. Everything's looking good. What is, let's see what trade curve analysis. Let's look at this. So we're down at the 1 standard deviation move right here. How much would it cost to put on a hedge just to cover this new trade? Well, it probably wouldn't cost anything if we diagonalized it. That's what I was thinking about doing. I was thinking about doing a diagonal 12 and 20 just to see how we're doing. How many more days do we have on those 20 that we've got there? Let's see. But a 5-3 probably would be sufficient. But we do have some exposure with a 20% down move or here, but we don't have any blowout type thing. We don't have anything that's going to really rip us off, but we look really good without the income trade. That's what's disappointing is this thing looks really good without the income trade. And the 20 that we have, we've got 31 days on those. So it looks really good, but I'm saying you throw in the income trade and boom, you do have some exposure. Now your exposure is a little more, the less volatility that we get. So we could lose, 4%, we could lose $6,200. So that's something to think about. Definitely something to think about. Let's put this back up to 40. And let's see if we can add maybe a hedge. Let's see what this does. So let's go into ES. And we want to find 50 wide strikes, but I don't think we can find them at the 120 days, right? That's what we figured out. We go here and we go down to where it's $3 and we have 100 wide strikes. So it's not really where we want to go. You could do 100 wide, but it's just not as good. Or you could move your strikes up here to 30, 50. It's just going to cost you more, right? It's just going to cost you more to do that. But certainly we could figure out if we sold these for 520. Let's see if our little thing says here. If we went here and sold them for 520, and let's say we harvested at 40 cents, what could we buy our loans for this thing to be totally free? So we could buy the loans for 280 rather than $1.55 if we did our shorts at 520. So that might be good. What if we harvested these at 80 cents? See what that does. 80 cents, let's do the solver. We could do those at 256 if we did 520. I'm not sure if I like that or not, but it does say that I could, do it that way. Let's see what that looks like if we were to do a 520, 256. Would that even be a hedge? Let's see. 520. So we would do the 520. Hold on, let's see if it'll do this. 520, 256. So we would sell, and we wouldn't have to do but 3 of them, but I'm trying to say if we did 12. We sold 12 of those, right, at say 520. And then we did 92 days, 93 days. And we said we could spend 256. 256. Might could get them right here, right? See what this looks like, 20 of those. I don't think it'll let me evaluate it. One time it did let me evaluate it. Let's see. Now let's go back to this little thing over here. See if it'll let me evaluate it. So let's go add order legs. Yeah, it does, doesn't it? Well, no, it doesn't. Yeah, it does. It does the 12 and the 20. Look at that. That's kind of good. Now we still got, looks like we've got some problems here though, but it certainly built this up a little bit. But your grind down problem is still a problem. I don't like that. Let's see if we did this. Yeah, you still got, $6,000 worth of risk to the downside if we had a grind down market with very little change in volatility. If volatility stayed the same, you're down $5,000. But if volatility kicks up, then you have a crash. And we've certainly helped ourselves. Let's take off the order legs, see where we're at. Okay, it helps everything across the board. Look at these numbers here, right? If we're down 4% with the order legs, is it not going to give me my order legs? And without order legs. Oh, now it's not working. Darn, it was working good. I'm not sure what I want to do. Let's see how close some of our orders are to filling. Some of our GTC orders. See how close we are on some of these. So let's take these off. And 330 to 155, that's nowhere close. That's, okay. That's nowhere close. So we really don't have anything that's really close. I don't know. Maybe the best move is not to do anything. Let's see how our net lick's doing today. Let's just look at that. Net lick. So we want to keep up with this to see how this whole thing is doing. 9, 17, 24. And we are at 76, 122. That's what I'm talking about. 76,122.84. Yeah, I'm still in like, we're up $233. Play it, Rico. Let's go ahead and play the music, for God's sakes. Oh, the stuff is
Well, we're moving on now to the side. It would be like apartments in the sky.
God, the band, everything's messed up today. 53 and 86. Let's see what that looks like. 53 and 86. 86. And we do VIX at 17. And our buying power is, yeah, requirements. We want just ES and SPY. Let's do that. So we are at 24 plus 2475. Let's see what that is. 2475 plus 24,760 equals 27,235. We still got Bill in there. 27,235. Okay, that looks good. So it's just I don't know. What's y'all's idea about the income trade? Do you like what we're doing with the defined risk trade? Rick, we could even do a Rick trade. I don't think Rick's in here today. You could do a Rick trade, a 1 day trade, and to bring in a little bit of premium. We could say uh, screw the SPY. Let's see, let's take that off. Go to risk analysis. You go, to heck with this thing. Let's look what it looks like now if we were to put in a 120-day put. So let's go to ES. It's probably going to be too big. Let's see, ES. And let's clear this. And let's go to 120 days like we did back with the 112 thing. Let's just see how big this is. It's probably way too big for the account. But if you went to a 10 delta, that'd be this. And that gives you theta of $27 per day, right? Let's go back over here. See what that looks like. It's probably going to really make this zero. So you probably wouldn't have a lot of these that you could do, but you could probably handle one ES or a few of the micros. Let's see what this looks like. Let's do order legs. Yeah, you could definitely handle one, right? But you're still, losing your hedging power. That's for sure. I have this off. Yeah. So I don't know. I don't know. I mean, there's really no good way to do it. I mean, here's the thing. I think you're either going to be a fully hedged fund where you've got hedges to the downside that are going to cover you, or you got to say, well, I got to take some risk. And so you take a calculated risk, and a $14,000 risk in a $75,000 account is not what I would say too much risk for a trade that has a 3% probability of profit. Yeah, exactly, 93% probability profit. So, you got to take some risk to kind of figure this out. So I think that's probably where we're going to land somewhere. It may not be the 7 day trade. And the reason that may not be the 7 day trade is, quite frankly, and I told you this before, the back tests of it just don't look good at all. Just doesn't look good at all. 1.7% return, a 20% drawdown. Now, of course, they don't have the hedge, and it's hard to figure out, with the hedge, how much this thing is going to draw down or something. We wouldn't think it'd be 20%, but you do have a win rate of 97%, but a 97% win rate, and you've got 1.7% annual return is not that good. But what I like is even with what we're doing, this trade has a 90% probability of success in the SPY. Let's set it up. So if we go to SPY, and let's clear all of our orders here, and pretend we were doing the 7 day today. So you're going to go down to about where it's 60 cents or so. So right here, the 540, and make it 15. So that would be 515. Is that right? 15 plus 25 is 540. So let's move our strikes down a little bit this way to get our thing going up to about five, because you want to bring in $500 a week. That's kind of what we talked about. I mean, here's the good part is that has, remember on the back test, it said it had a 97% probability of success, or 90%, 97% win rate. And that is indeed what the probability of profit here is, 97%. Probability that you get to 50% is 73%. So you've even got a bigger probability of profit if you go to expiration. The theta on this is $9.62. And yeah, Sweet Bobby John says, given 50 wide bag, what do you think is the ideal day to expiration? Yeah, I think I always loved 60 days. I always loved 60 days. 90 days would probably be fine, but I think, 60, anything around there is fine. And what we're going to do, time and time again, what we probably could do is on Friday, go over here. And I know what you're saying. You're saying, Bobby, God, you sound like you're all over the place. And maybe I am, but we're just evaluating things, y'all. That's all I can tell you is look at the expected move. Hey, Hal, what are you going to say? Was that Hal talking?
Hey, Bobby, this is John.
Hey, John.
Hey, the reason why I asked about your thoughts on the ideal DTE for this Sweet Bobby hedge is
for the Sweet Bobby hedge. Got it.
Yeah, the bag, that's the auto spell that wouldn't let me put BSH in. But for the hedge, if you're looking at 60 days, if that was your favorite because you're going out 2 months or whatever, if you're willing to pay for that hedge at 60 days, which means basically 6 times a year you're willing to pay for a hedge. You may get them for free if the market goes up and you can, build a wall. But even if you don't build a wall, if you're adequately hedged and you're paying for that hedge every 2 months, then the income trade in my mind would be how much do I need to make on a weekly income basis to cover that 2-month expense? And then, of course, you're breaking even overall at the end of the year, and all you're really doing is waiting for the event to cash in.
Yeah. So, and I would say, 90 days is really good for that. Probably. Herb says, what about buying 60 Delta 150-day put and selling weekly puts at $5 lower strike? So what you're talking about is doing a poor man's covered put, right? That's kind of what that would be instead of poor man's covered call. Buying a 60 Delta 150-day put with $5 strike. Yeah, that's kind of what that is. Yeah, you could do that. I think what we're trying to do is figure out what's the best way, y'all, to go, hey, let's pull in $500 a week. Because if we could pull in $500 a week, $500 a week times 52 weeks, if we were pretty consistent at that, that's 26,000. And this is a $75,000 or $76,000 account. You're looking at a 34% return. It's really good. And let's say that, like we did the other day, we said, well, okay, you're going to have some losses in there. So what if it's actually 350? 350 times 52 is 18.2 divided by 75,000. What do we figure that out? 26 or so, 24. So, I mean, there's ways to do it. It's just, to me, the 7-day trade was kind of cool because you go, hey, man, I can figure it out every day, every Friday. I sell premium and I got a 93%, 96% probability of profit. And most weeks I'm going to make $500. There are going to be weeks that we're going to lose. Probably good to have you a 2x loss to stop yourself out, at $1,000. But it just seems like a good way to get a little bit of weekly income with our hedge there. Problem is, as we've seen, the hedge isn't there. today with what we're doing. So here, like here, for example, this week going into this week, the expected move was up. So it expected to be up higher than it was this week. So you definitely would have said, yeah, I can see me selling puts now because the expected move is up. Maybe when the expected move is down, you see this, like we went from this expected move to this expected move. Maybe on those weeks you say, I'm not so sure about selling one. I don't know. Maybe there's something that we could do. We could use the big green monster to make our decisions. If we sit there and say, if something's overbought, maybe we don't do it. But if something is in the fair value zone, like it is now, then maybe that's what we do. You're comfortable selling puts down below where the oversold area is. So there's all different ways that we can do this. It's just that we need to figure out something. You want to go back to selling 120-day puts? That's fine too, as long as we get some theta. Because I think I just figured out that I'm probably not as good as Mark Spitznagel at being just a fund that makes money during crashes. Now that sounds fun, right? That we sit here and we just lose money and tread water until the day comes, but we just don't know when those days come. So I'd rather figure out a way to go, hey, let's get $500 a week. How can we get $500 a week? And that seems really, really cool. So I think that's what we're doing, and we're on our way this week, certainly, unless something goes wrong with the Fed tomorrow. We're up. God, we were up more than that. We're up 230 a while ago. Now we're only up. Well, look at this. Now the market's down, so we're only up 150 on the week. I guess we could even say, well, what about if you took this and rather than letting it go to expiration, you closed it at 50% profit? We could look at the back test on that, but this just doesn't back test well. But again, when you're back testing, we don't have the black swan hedge or the sweet Bobby hedge that we have. So we're just trying to figure out something to do. And I would love to hear y'all's ideas. Don't think that I have all the answers. I think it's clear that I don't. We just don't want to go through. I just can't go through what we went through on August the 5th, with my accounts being overdrawn and margin calls and all that. We just want to make sure that we're a little safer. With a $25,000 risk here every 7 days, is that safer? I don't know. Now, the way that it was presented in the SMB Capital thing, they never talked about the risk. They never talked about, hey man, you could lose $25,000 in a week. If you don't have a hedge to the downside, I mean, you could really get yourself in trouble. So I'm curious if anyone's got any thoughts. I'd love to hear it. And I appreciate y'all putting things out there. Did they take assignment? What I did this last fact, they didn't talk about taking assignment. No, I don't think they took assignment. They closed it early, and remember they switched to calls. If it was going to be assignment, they switched to the call side and basically did a poor man's covered call. But this looks like it's working the first week for sure. But is it going to work every week? That's the thing. We got to figure out how to bring in $500 a week that would average $350 a week. That's what we really want to do. And that's why I thought, hey, Ben, I'm looking at 30 days to expiration of $5 short puts for $250 on ES. $5 short puts. That's like a 3 delta now, and for that to be hit is like a 20% crash in the market in 30 days. So you're looking at a 30 DTE $5 short put, and that's what you're saying. You're bringing in $250. Austin says I'm doing 120 DTE 111 150 wide for break-even credit and rolling the upper put to collect credit. Okay, that's interesting. That's interesting. Have you heard of the rolling diagonal strategy? I have not, Tyler. It's like money press, but you roll the long put as well every couple of weeks. You have to tell me more about that rolling diagonal strategy. So we'll figure something out. I mean, I just don't want you to lose hope. You know, I want everybody to be good. I just don't want to take everybody down the rabbit hole of the 111 like we did before with the excessive amount of risk that we had on. And I know what some of y'all are saying. Hey, Bobby, the reason is because you had those extra 33 puts or whatever, 30 or 33 puts. Yeah, that was only in one account though. I didn't have that in the other two accounts, and those still suck too. Yeah, post it in the Discord, Tyler. I'd appreciate that. All right, guys, good discussion today. I love every one of you and appreciate you for being with us. And we'll see everybody tomorrow. Y'all be good.